analyst. Geoff, thank you very much for joining us on ET Now. What do you make out of the recent events which have taken place with respect to sanctions on Russia? Do you think it will bring down the kind of offtake of crude which India and China is undertaking from Russian companies?
I think it's as ever. I think these things are very hard to predict, especially when President Trump's involved. You don't know how persistent he will be on the sanctions front. But I think the developments are very positive because although the price of oil has obviously gone up with these two major Russian oil companies being sanctioned, I think the fact that we do seem to be making some potential progress anyway on both China and India, of course, reducing their imports of Russian oil, I think is something which is going to be welcomed. Now, by the White House, obviously for India, it means you've got to find the oil somewhere else. And of course, that's a challenge. But I think what we have to watch here is the price of oil. It has shot up, as we know, because of the sanctions. And one of the things Trump was hoping to, I think, have over the what we call the holiday period here, the end year, the Christmas period, etc., was gasoline prices ticking lower still. And that's probably not going to happen if oil prices continue to rise or stay as firm as they have after these sanctions were imposed. So I think there's still a lot of moving parts. But overall, I think it's we've got to be very careful about how high oil is allowed to go.
Little enthused by the fact that Trump is meeting the Chinese president on the sidelines of ASEAN meet. Do you see some kind of positive outcome coming out from that meet?
I think there's a good chance. I mean, what's so interesting about what Trump does is that a few days he was going to meet Putin and not meet Xi, and now he's going to meet Xi and not meet Putin. It's a sort of roller coaster, and have to do, as they say, you have to take each day as it comes. But if he is going to meet Xi on the sidelines of this conference in Asia, I think it does indicate some positivity. Now, what does that mean? I think in practice that means hopefully moving towards some sort of a deal on rare earths. In other words, hopefully getting to the point where China's decision to ban exports of rare earth, could to the US could be eased going forward, because that's something clearly that has upset the White House. And it also probably means the threat that we had from Trump of bumping up Chinese tariffs on Chinese US imports from China up by another 100% isn't going to happen. So I think you've got to believe that if this meeting goes ahead, you get some easing of tensions between the US and China in terms of trade. But, we have to take each day as it comes. And right now, people are bullish about it, and that's good. But we have to see what outcome there would be. Nevertheless, the fact they look like they're going to meet, I think, has to be viewed as a positive development for financial markets.
Hi, Geoff. This is Harsha. Good evening from where you're at. Give me a sense as to how you're playing how you're playing or how you're advising any investor on how to play the current trends, especially in global geopolitics. You're talking about the amount of uncertainty that's there. So how best do you play that? Do you play it through the bond market? Do you play it through gold, silver? How best do you play it?
I don't believe you play through gold and silver. I was on another network 2 weeks ago saying I thought we were somewhere near the peak in gold. Whether the pullback you've seen recently is sustainable or whether it goes back up again remains to be seen. I think bonds are risky here, frankly, because we are probably going to see some more edging up of US inflation in the short term. We're going to find out more about that, we think, tomorrow, of course. And although there's some suggestion the budget deficit in the US may have come down slightly in the last financial year, ending at the end of last month, obviously the deficit and the debt is still a major burden. So I wouldn't be very aggressive as far as bonds are concerned. I think it does leave you generally with continuing to look at equities. And I think that's still the case as far as emerging markets are concerned. EM is outperforming developed markets by about 1,200 basis points now this year, which is a tremendous outperformance. And that's even happening now over the last few weeks, last month or so, when the dollar itself has begun to rebound a little bit. So I think you're seeing a lot of buying of EM equities on the back of the lower dollar earlier in the year, on the back of China still doing very well in terms of AI, although not the rest of the economy. India now, as you've said at the beginning of your program, looking a little bit better. And just generally the underperformance we've seen of EM over a number of years and therefore relative valuations. So if you assess all of these financial assets, I still think short of there being some major crash out there, which I'm not sure what would drive that particularly, except valuations being somewhat high in the US especially. I think the way to play it is much more equities than bonds or commodities.
And Geoff, before we let you go, your quick take on some emerging markets, and let's talk about India. Where do you think India stands amidst all of this geopolitical uncertainty, especially on the crude front?
I mean, I've got India wrong this year. I thought it would do better than it's done. It's been an underperformer, of course, but it is starting to move now. And I think there are a lot of reasons for that. The one thing we do have to worry about, and this is sort of classic thing you look at as far as India is concerned, is the rebound in oil prices globally, and does this hurt the economy? And the issues that we've discussed already, where will India get the oil now? That it used to get from Russia, if those imports from Russia decline. But inflation's dropped in India to just above 1.5%. Real interest rates are pretty close to 400 basis points. I think there's more rate cuts therefore to come eventually from the RBI. I'm well aware, of course, the inflation numbers are partly lower because of food prices, which have been very weak. But the economy still continues to look pretty good, and that will be supported, I think, by the sort of restructuring, if you like, of the GST. And I think people have been surprised about the weakness of India this year relative to other markets. So you're seeing, relative valuations improve versus, say, China. And I think positioning has not helped India. So there are a lot of factors here that if you were to see a trigger, better economic growth, another interest rate cut, another bit of a rebound in the rupee, and I think India would do relatively well here. And I'm still constructive, even though obviously it's been a sizable underperformer this year.
Geoff, thank you very much for joining us today on ET Now.